Hi, everyone. Welcome back to Web3 Founders World Talk. We are here to bring you a captivating conversation with the movers and shakers of Web3 industries. Today, I'm really excited to take everyone on this journey of discovery and inspiration with the CEO and co-founder of Upshot, Nick. Welcome to the show, Nick.
Hi, yeah, thanks for having me.
Would you mind telling us a little bit about yourself and your project?
Sure, yeah. So I'm the co-founder and CEO of Upshot. In Align, we build financial infrastructure for NFTs. A lot of this is built on top of these ML-powered NFT pricing models we've built, and kind of other ML-powered financial tools or insights that we've built for creating kind of more expressive or mature NFT financial markets.
Would you mind telling us a little bit about your background? How
Sure,
did you
yeah.
get in? Yeah.
Yeah, so prior to Upshot, I was leading blockchain development at one of the largest insurance companies and asset managers in the US and Canada called John Hancock. Parent company is called Manulife. And there we were doing a lot of research around um, building systems for decentralized insurance of kind of non-parametric long tail risk. So how can we sort of accurately price risk in these really long tail scenarios? How can we pool risk in kind of risk mitigated ways? How can we verify the outcomes of different insurance claims? And it was through that research that I became interested in this broader problem of bringing liquidity to illiquid markets. And so it kind of led nicely into some of the interests that have kind of led to Upshot, I guess.
Yeah, well, it sounds like you're like perfect fit for crypto industry because I would say there are a lot of risk elements. So definitely we need some procedures for risk mitigations. So that's something
Absolutely.
yeah, I can get it from your background. So it sounds like Upshot is like dedicated to becoming a financial infrastructure to facilitate NFT and DeFi collision. So we would just like to know what made your team focus on this niche in particular?
Yeah, I think it was around mid 2020 when we had been exploring some kind of general, more academics kind of research around subjective consensus mechanisms and incentives for enabling, I guess, decentralized communities of actors to reach agreement on resolutions to subjective questions. And as we were thinking about kind of practical go to market for this, practical use cases, um, we started thinking about this problem of NFT price discovery. This was still very early in the NFT days. This was before the kind of initial NFT bull markets, but we anticipated this problem of NFTs being this low velocity, non fungible asset that don't change hands very often, which means that these open market interactions, these transfers of ownership, not being a sufficient means of pricing them as they are with kind of more fungible or liquid assets. And when you look to, I guess, analogs in the real world, you see things like real estate, things like traditional art, these other kind of non-fungible, relatively low velocity assets, using appraisals heavily and sort of supplementing their price discovery. And we thought there was an interesting opportunity to kind of build a optimized solution around appraisals for NFTs, to kind of power a more real-time, reliable price source for them. Because once you have a reliable source of kind of like valuation for assets, you can start to build a diverse suite of really interesting DeFi primitives or DeFi protocols on top of them. So that's kind of what kicked off a lot of our early interest and focus on kind of NFT pricing.
Yeah, NFT appraisal, I would say definitely is one of the substantial pain points in this sector. Well, since you mentioned that it's still very nascent, it's still very early stage, have you ever encountered any sort of pushback or resistance or challenge that you may find it, wow, it's really like, struggling and during your journey? And also, can you share some insights on how to overcome these blockers along the way?
Yeah, yeah, lots. I'll share a kind of like technical blocker we had to push through, and then I think more of like a market-based blocker. On the technical side, when we were initially starting building infrastructure for NFT pricing, we were focused on some of the research we had been working on in the very early days of Upshot, which was around this kind of crowdsourced consensus mechanism, asking subjective questions to the crowd, having these human actors respond to these questions, having incentives set up such that they maximize their reward when they respond to those questions honestly, and then using the result of those to kind of power this NFT pricing problem. And so we had these human appraisers, just kind of human collectors, appraising specific NFTs. And the problem with this is it's not very scalable and it's not very accurate. When you're asking human appraisers to appraise NFTs, maybe they can get through 100 in a day, maybe less, maybe a little more. But you are significantly hindered in terms of the number of assets that can be valued via that mechanism, and then accuracy suffers considerably as well. You know, we're humans, we're sort of suboptimal kind of cognition machines relative to like more powerful computational engines, and so you have to ask these highly approximative questions to humans when you're asking them to appraise things. You say, is this NFT more valuable than this one, or given this NFT and these kind of four price ranges, where does the value fall? What price range does the value of this NFT fall within? And so we had to come up with a new solution after having built out this kind of human crowdsourced appraisal engine. And so in the face of that, it was pretty obvious that a more ML-based pricing mechanism was going to be more viable. It was going to allow us to scale significantly larger. Right now, we're appraising over 100 million NFTs as a result of this, as opposed to 100 a day. And we're doing that every hour or even sub-hourly, and we're able to do it with much tighter bounds of accuracy. So by moving from this kind of initially dreamt up idea of a crowdsourced mechanism to an ML powered one, we're able to overcome this initial hurdle of a lack of scalability and accuracy in that type of appraisal. And I think a problem that even we still face today to a degree is kind of more market based, in that as an approximation for value of NFTs, people have sort of gravitated towards the floor price as the canonical value for NFTs. And so creating a compelling argument for why individualized pricing is useful has become a bit of an uphill battle for us. I think it's a battle we're winning. It's a battle that we care very deeply about, and we're going to continue to educate the market around. But NFTs obviously are non-fungible assets. You can't summate the entire value of a collection by saying this is the value of its least valuable items. That means that's reflective of the entirety of the collection and the kind of diverse composition of valuations across a collection. That's why individualized prices are important. And we're starting to see some of the kind of pains of relying so heavily on floor price for so long, as we try to build more interesting financial primitives like NFT lending for grails of NFTs, or perpetuals that track different parts of a collection outside of the floor, and things like that. And so that's something we're solving via education, via sort of kind of solving these problems in the wild by building out lending infrastructure that specializes towards grails or non-floor assets, perpetuals for the same, indexes for the same, et cetera. But yeah, those would be the kind of like two problems I would say that we've faced and have been kind of fighting through.
Yeah, wow, it sounds like a lot of work. I would say it's actually
Yeah,
really
definitely a lot of work.
impressive. Yeah, and I think that's definitely the beauty of the whole like Web3 entrepreneurship kind of thing, because you get to know, oh, you're facing different challenges, but you get to also be creative. Sometimes you get to know, oh, what kind of solution would definitely may, solve the issues better, or may, the things may go to the next level. And since you mentioned the like you're actually came from like manual efforts, definitely it's not really scalable. That's why you pick machine learning powered NFT appraisal system. So how, I mean, can you just tell us a little bit more about it? Like how does this appraisal systems distinguish itself from other tools in the market? Because there are a lot of like players that are doing, like they're actually working on the same sectors. And how does it contribute to unlocking the full potential of the NFT market? Since we mentioned that the pricing, the appraisal would be a really substantial pain point. Additionally, what kind of strategy like does Upshot employ to measure this near real-time NFT pricing?
Sure. Yeah. So at a high level, I think like at the core of our ML models is not much different than how ML models work via other providers, or just kind of anyone pricing any financial asset, is we're taking in as much applicable data as we can. We're taking in real market data, sales, mints, kind of softer market data, which is like order book data. We're looking pretty deeply at kind of various networks of wallets, communities, collections, how like various clusters of nodes or wallets in those networks interact with each other, the influence those clusters have on kind of future price movement. We look at things like sentiment analysis and all of these different types of data. And I think one thing that was important for us early on was to structure a model system that was highly scalable, both horizontally and vertically. And what I mean by that is a model that is mostly generally applicable to large swaths of the NFT space. So not having to sort of create these kind of customized parameterizations or customized models as we want to add new support for new collections. As collections start getting indexed by us, they also just enter our appraisal workflow. It's a highly generalizable model that works across the NFT space and without significant degradations of accuracy. So that was a really important problem for us to solve, and it was a slightly difficult problem for us to solve. But doing so has allowed us to create coverage that exceeds any other provider, producing appraisals by large kind of orders of magnitude. And then vertically, I mean, is a lot of models tend to degrade as you look towards the long tail of assets within a collection, when you look towards the grails, when you look towards the highly valuable assets within a collection. And that's because these things really don't change hands frequently. NFTs in general don't change hands very frequently. And when they do change hands, it's largely happening at the floor. A grail may change hands once a quarter, once a year, sometimes once every 3 years. Sometimes it never changes hands. And so figuring out how to take this highly generalized model and also make it applicable at the tails of collections was a especially important problem for us to solve. Because as I mentioned earlier, appraisals aren't as useful near the floor, where the market is already interacting with those assets somewhat frequently. The market does a decent job of pricing floors. The market does a really bad job of pricing the mid-tier NFTs and the grail NFTs that really don't change hands frequently. And so we've made some kind of useful insights into how to borrow sort of the data richness or relative data abundance of these lower value assets that change hands more frequently, and inferring the value of the mid-tier and grail assets that don't change hands as frequently. And that's unlocked a considerable amount of sort of accuracy benefits as you start to price those more long tail assets. So that's a bit
Wow.
of sort of like how our models work and sort of the things we've prioritized. Just to touch on your second part of the question around how we measure accuracy, it's not like reinventing the wheel here. This is kind of a common statistical practice, but we essentially take the timeline or the time series of actual market sales that NFTs have realized. We overlay our appraisals onto them. And for every sale, we look at the kind of most recent appraisal that happened before it, and we say how far off we are in predicting that next sale that's occurring. And then across several sort of percentiles, at the 50th percentile, the 90th percentile, and the 95th percentile, we can start to get a sense of kind of what percentage is our error bound relative to those data points. And we've been able to exhibit industry leading accuracy across all three of those percentiles quite consistently across the space, which is something we're pretty proud of.
Wow, that's very, very amazing. I would say, because I can tell definitely it's like your guys' unique differentiator, but it's really good to know some backstage stories behind it. Thank you for sharing. Well, I do notice that you guys have a really comprehensive scope of product, and you like, since I mentioned that your mission is like to build up the NFT and DeFi infrastructure thing, and also you also release the API tools to provide really sophisticated data and insights for developers. We're just like to know like what kind of use cases are they trying to build with the API tools that you made?
Sure. Yeah,
nowadays?
there's a number of use cases. I think outside of the DeFi X NFT space, which is like maybe where we're focused more on, just quickly covering some of the other use cases, they're quite applicable across like marketplaces, portfolio trackers, wallets, analytics platforms. They're used a lot by individual traders or market makers, kind of deploying capital themselves into the space to inform some of those decisions. There's a like quite a broad top of funnel slash number of sectors that benefit from having some notion of accurate pricing for NFTs and other kind of quant ML based metrics. And I think where a lot of our focus is, both in partnership and in tools that we're building ourselves, exists at that intersection of DeFi and NFTs. So using these appraisals to create more capital efficient NFT lending markets. We're actively running lending strategies that we've built on top of our NFT appraisals to manage external capital and deploy it across NFT lending markets. We're doing similar types of things shortly in the spot market space via NFT AMMs powered by our NFT appraisals. We're starting to get more into a sector within that space that I think is going to be quite large, which is NFT perpetuals, using these NFT price feeds as a means of creating kind of synthetic exposure to different parts of the NFT space, and building NFT indexes as an input to these NFT perpetuals to give people synthetic exposure to baskets of collections or indexes of NFTs for more kind of passively constructed exposure to the space. So there's a lot of different things going on. NFT prices do unlock a lot of different sources of value and different kind of ways of engaging with NFTs in a more interesting financial sense. So that's where a lot of our focus has been.
Yeah, looking forward to seeing more innovations on NFT and NFT-fi sectors as well. Especially we're being really bullish on this sector. So yeah, looking forward to seeing more innovations, creativities. Well, you mentioned lending strategy a couple of times, and we have noticed that you guys are like stepping into this lending strategy market as well. Can you give us more information, or like can you just elaborate on what's your lending strategy in particular, and how does Upshot plan to improve the overall liquidity with this new product? Because I know there are a lot of players, they're just aiming to have this liquidity solution in the market, but yeah, everyone probably would have have their like own recipe differently.
For sure. Yeah. So there's a couple problems in the lending space today in that one, we have these kind of two different parts of NFT lending, which is the peer-to-pool model and the peer-to-peer model.
Yeah.
The peer-to-pool model works by pooling capital and just deploying it into the NFT lending space based on singular Oracle price feeds per collection, which means you're extending loans that are perpetual to the floors of collections. The downside here, obviously, is that much of the collection, as you start to get to the mid-tier Grail NFTs within a collection, are largely incompatible with that because if they did want to take out a loan against their NFT, they'd be taking out a loan as if their Grail was priced at the floor, leaving significant money on the table and taking on more risk than would likely make sense for that type of engagement. And then on the peer-to-peer side, it offers a theoretically more capital efficient sort of relationship with lenders and borrowers, in that you have kind of negotiated terms for the LTV, the interest rate, the duration, et cetera, of these loans, meaning that if a lender and a borrower have a good sense of what the value of a Grail or mid-tier NFT is, they can construct terms that better reflect the kind of appropriate LTV, interest rate, et cetera, for undertaking a loan there. And the problem here is obviously that it's peer-to-peer. It's not super scalable. In order for capital to enter that system, you need lenders that not only have capital, but are quite sophisticated in understanding sort of the valuation of many different assets. And so what we've done is we've taken our appraisals and we've used them as an important input into developing a more sophisticated, generally applicable lending strategy across larger swaths of the space. Because when you have appraisals, now all of a sudden you have a sense of valuation, and then you can start to create more interesting metrics that are I guess, more specific to lending, things like recovery rates, which are essentially look ahead appraisals saying we have an appraisal today, which is fine, but what does that mean about the valuation of this asset 15 days from now or 30 days from now when a loan may reach its kind of stage of maturation? And in doing that, you need to develop some perspective on how prices are going to move in the future. So we've poured a bunch of work into making predictive estimates around valuation, and then packaging those up in a way that doesn't require capital providers seeking to get financial exposure to lending markets to need to know anything about lending markets. They deposit capital, and we do all of the hard stuff of figuring out loan terms, constructing well-diversified portfolios, managing risk, etc. And so that's a way that we've been working to take this pricing infrastructure that we've worked really hard to build and onboard significantly more capital than was available to kind of get into the NFT lending space before. And so we're hoping that will help spur significantly more liquidity into that space.
Well, the product is coming soon, right? It's about to launch.
So these are live via a launch partner called Astaria to date. Astaria is doing some
Wow.
re-audits of their contract. So we're going to be pushing an update to those strategies as they push an update to their system, likely in the next kind of 4 weeks. But these strategies are expanding as well and will be kind of applied to a much larger part of the NFT space shortly too. But yeah, these are live.
Wow. So it's coming our way and cannot wait to test it out. Because I do see you
That's right.
guys are like value scalability like very much. And since like you guys have been like branching out to your product from API, lending, appraisals, and there's so much more. And could you
Mhm.
just please share more information about like your expanding product scope and what kind of structure or like ecosystem that you guys are aiming to build? And additionally, what is your main focus? Because it's a lot and it's all so it's super amazing. But we want to know what would be your main strategy.
I think our main focus it has always and will always be in us being seen as a source of truth and reliable pricing for NFTs. And the reason we're starting to move up this sort of DeFi X NFT stack is one to sort of bootstrap this nascent ecosystem that we anticipate will be quite large, as well as being able to build more kind of optimized solutions that plug into our pricing systems more efficiently. At our core will always be us being this price oracle for NFTs and supporting the kind of creation of liquid markets for anything on the back of that kind of price oracle for NFTs. We're just building these additional things to help bootstrap some of that and build up more optimized solutions in kind of the image we see optimal or preferable.
Got it. Yeah, makes sense to me. I mean, it's just well, I think we mentioned that a couple of times, like you guys value scalability, and it seems like it's a core strategy in your whole like product scope. In addition to addressing like NFT pricing and liquidity concerns, and I can see you guys are being like actively working towards, unlocking further innovations, applications with the sectors, and also, since we mentioned like we value scalability, which means I think you guys are probably thinking about, oh, are we gonna have another, like explosive growth of DeFi, something like DeFi summer? And what kind of factors do you believe that could serve as a really significant catalyst for maybe NFT summer? NFT-fi summer, do you see like NFT-fi playing a pivotal roles as one of the drivers for the next cycle of the growth? I know this question could be really tricky, but I think everyone's starting to, discussing the next cycle thing recently. So what's your take on this?
Yeah, absolutely. I think NFT-fi will be one of the leading narratives of the next bull market. I'm quite bullish right now, personally. I think things are starting to pick up again, and I think there's going to be a couple things that spur some of that growth, specifically within NFT-fi. I think there's a couple narratives that are going to experience fairly explosive growth in this next cycle. But specific to that category, I think these financial primitives that are being stood up and starting to see more capital inflows are going to
Mhm.
spur a lot of that growth. To date, NFTs have been somewhat restricted to spot market interactions. People can go long only, people can't take out leverage. The introduction of new vehicles, both for leveraging in the NFT markets as well as hedging positions in the NFT markets, will allow for significantly more capital to enter that space and likely spur significant growth. We've seen this in previous cycles as more derivative instruments come online for kind of vanilla DeFi, the growth that those kinds of things enable. And I think as derivative instruments, particularly around leverage, start to come online in the NFT space, we'll see similar levels of growth. One of the things that's particularly compelling about NFTs as well, which is another kind of catalyst for growth there, in my opinion, is that they're this incredibly expressive data structure. We don't need to just be representing PFPs or generative art or gaming items as NFTs. We can use them to represent essentially anything on chain. And so as more interesting financial instruments or financial assets start to be represented as NFTs, as real world assets start to come online as NFTs, we'll see this significantly expanded size of the NFT market in combination with these derivative markets, these kind of different financial primitives being stood up for NFTs, leading to significant growth of the entire space. So it's the both the sort of execution and bringing online of derivative markets for NFTs, as well as a significantly expanded scope of what NFTs represent, that I believe will be the two main catalysts of kind of the NFT space, the NFT-fi space, and lead to a lot of growth in crypto more broadly.
Wow, thank you for sharing. On top of your answer, I was trying to, well, I was trying to figure out what do you think of like NFT utility? Because we both know, like we all aware of what's going on with Azuki and PFP was the the main drivers of the like the mainstream adoption. Like that's why there are a lot of like luxury brands and even like Starbucks, they step in this world to somehow have their own attempt to NFT world. So what do you think of that? Like, do you think PFP is still gonna be the major utility in NFT space, or um,
I think PFPs have been an interesting experiment in sort of online community building, to a degree, online identity. And
mhm,
there have been a small number of communities built around PFPs or built with PFPs that will sustain and continue to grow in the next cycle. I think Azuki's is a great example. I think the
mhm,
Yuga ecosystem is a great example. I think like Pudgy Penguins, Crypto Dick Butts, these different collections have shown like quite a proclivity for kind of becoming the foundation for strong communities online. I think as happens with any sort of explosive growth of a new asset, there was a lot of noise, there was a lot of snake oil, a lot of grift in the last cycle, and I think a lot of the PFPs that were launched over the last cycle will fade to irrelevancy over time,
mhm.
and that there will be pockets that are valuable, but they represent a much smaller percentage of the overall NFT market. I think NFTs with real utility, NFTs that tie to real world assets, gaming will represent a larger kind of percentage of the NFT market. And then NFTs that just represent more natively financial assets, insurance policies, maybe real estate, maybe different types of options or bonds or liquidity positions will become a much larger percentage of the NFT market over the coming months and years.
Yeah, well, I'm actually 100% signing with you on this. But yeah, other than well, real world assets, NFT utility, there's actually one word that has been, wow, I would say a buzzword, like Chat GPT, AI. It's all
Mm-hmm.
actually about Chat GPT. And sometimes I just feel like AI is like taking over our life. It's taking over, it's like all over the places. Everyone's talking about AI, and it's actually becoming a new headline for all Web3 entrepreneurs. It's not actually only for Web3, but for everyone. So what's your take on the intersection of NFTs and AI driven trends? Considering you guys have been implementing machine learning as a fundamental aspect of your business model, what do you think? What kind of innovation we could expect in this
I think there's a
intersection?
Yeah, I think there's a lot. I think AI is going to touch everything we do
Mhm,
as a society, as a people, and so there's a lot to cover there. I think specific to kind of pricing and NFT financial markets, which is our focus. I think AI, as it's sort of reached a level of maturity and I guess production readiness over the past year, has shown itself as likely the most deflationary technology we've ever seen, and has significantly increased the capabilities for us to interact in complicated ways with especially long tail financial markets. And so this is something that we're doing. I think this is something we'll see a lot more work around, is using AI more directly in these financial markets to bring more efficiency and liquidity into them. So using AI to more directly price assets in types of assets that we may not even consider assets today, or we've seen as kind of being too esoteric or long tail to consider seriously for financial use cases. But I also think, and this is something we're working on as well, we'll see as a part of this, AI start to come on chain more, and AI models or infrastructure around AI be built in ways that are more trustless, that can be verifiable on chain. In building kind of larger financial markets, as these NFT financial markets mature, it's going to be increasingly important that the models that are influencing them or interacting with them are increasingly trustless. And the way you can do this is by bringing them on chain and building kind of verifiable inference or related infrastructure around that. So that's what I'm particularly excited about. We're doing some work with some people in the space right now around this that will be announcing shortly, but I think we'll see kind of more AI touch the chain in increasingly kind of interesting ways.
Yeah, looking forward to seeing more narratives and crossover collaborations. Well, thank you so much for sharing your everything in terms of your product and also industry and other insights as well. Again, thank you so much for your time, and yeah, thank you, Nick.
Yeah, thank you for having me.